Welcome to Bunnex Investment Group. In this video, we'll talk about the secrets of making a lot of money in trading. This will actually give you the basis of becoming a businessman within this particular business. We will talk about the casino gameplay, becoming the casino. You yourself will actually click this video and watching right now. The game of positive expectancy, making money with the dumbest win rate, which is basically 30% or 3 out of 10 for batches of 10-10. Becoming the hard-coded trader. Sit back, relax, and have somewhere to take some notes. You need to understand all the literature that we go through so that you'll be able to apply this in your trading. And it's actually a promise. If you follow these rules that I'll give you, you will definitely see a change and make a profit within your trading. Firstly, trading is a high-performance activity, and we are punished for lack of knowledge and mistakes. If you do not know something, you will definitely see your punishment right away on your P&L. So we need to be aware of ourselves that we really know what we are doing in this particular business. So in this video, we'll talk about the secret to make money with a low win rate, as low as 30% or basically 3 over 10 within a batch of 10. We'll also discuss a plan to hack your mind so that you will become disciplined as well as fearless in taking your entries even after a losing streak. Firstly, we need to highlight that trading and gambling are the same. By similarity, we are actually saying both or these two activities will require you to give or predict an outcome before the event has been made. In trading, we actually ask you, is Euro USD going to the upside or to the downside? There are two outcomes. It's either it will go to the upside or to the downside. In gambling, when we actually take sports betting as an example, we would actually say, is Manchester City going to win against Manchester United? It's either it will win or it will lose. There are also different outcomes. So with that in mind, it will actually help us to understand how casinos make money so that we can replicate the same math in our trading. If we actually strive to become the house or to become the casino, we'll definitely see that our trading becomes a guaranteed business to generate profits. We have heard that the house always wins and the house is the casino. And our goal within this video is to leave you being a casino or being the house, the owner of the system, who is definitely going to make money over and over again, becoming a money printer. They work at a probability to make money in a ratio that after several trials, they will make a profit. That is why you see casinos who try to make players comfortable when they're within the house so that they keep on playing up to a certain number of trials so that they can actually lose. So here are the steps to make you, who is actually on the other side of the screen, to make yourself a casino. Step 1 is to obtain a trading strategy, right? We need a trading strategy so that we can know where to enter or when to exit. This strategy is basically an edge within the markets that will increase the probability of us to beat the odds of losing. So for the purposes of this video, we'll talk of the intraday 50 or ID 50 strategy, which is a very easy strategy, and you can look it up in our library of videos. Step 2 is to understand that long-term profitability cannot be achieved with scalping. Therefore, we'll implement more of an enter and forget. We are not going to trade several entries in one particular day, but we are saying on each and every day, try to only aim for one trade so that we won't waste the number of trials that we have, because we want to have a batch of 10, 10, 10. After 10 trades, that is when we start to look to withdraw our profit. Step 3, our trade will only be closed with a stop loss or a take profit. No shifting or stop loss or take profit. That's saying that trends among traders. I have a signals group or a signals channel whereby I give as traders my entries, stop loss, and take profit. Within that VIP channel, several traders would ask you to shift the stop loss to entry after a small spike into profit, but later to see that same particular trade being closed off at entry. So we are saying no shifting of those parameters, and there will only be those parameters that will close our trade. Positive expectancy is actually the most important criteria, or the most feature that you must be able to take. So before placing any trade, we must first expect that we will lose the first trades, so that we enter with a loss prepared mind, right? When we are engaging within this particular system to get to become our secret, is to expect a loss within the first trials. Using the ID 50 entry strategy, we'll be looking to fail 7 trades and win 3 trades in every batch of 10s. So we are saying each batch we are expecting to lose 7 times and to win only 3 times. However, the distribution of losses and wins is unknown. We won't be able to say we are going to win 3 times first, so that we won't be trading 7 times. But we are going to say within these 10 trades, our anticipation is to only win 3 trades and to lose 7 trades. This will require us to use a reward to risk ratio of 3:1, and below is a chart of our anticipated entries. We are saying this is how you will be looking to see. Trade 1 will be a loss, trade 2 another loss, trade 3 another loss, trade 4 another loss. These are 4 losses in a row, meaning that it's actually a losing streak. Then after that, we'll actually get 1 win, loss, and another win. Then loss, and the last one being a win. I've tried to make the hardest possible distribution of wins and losses, whereby we'll actually start by getting all losses and then the wins just being sprinkled within the losses pool. So if we manage to hold ourselves to reach 10 trials or 10 trades with such a losing streak, with such a distribution of wins and losses, we'll actually make some money. So here's the mathematics of winning. As we have seen on the above table, we have 3 winners and 7 losers. Below is the math of how money with such a distribution of winners and losses for every batch of 10 trades. So we've said our winners are going to be 3, our losers are going to be 7. Say we are saying our R, or our loss size is $10, right? Which can be attained by using a Forex calculator, which gives us a lot size that will allow us to lose only $10 when we are wrong. So in this particular case, we are saying the winners will give us $30 on each trade. That is a total of $90. Then the losers will actually be $10 each, and the total will be $70. Then our net profit will be actually $20. We are actually talking from an account of $250 to $500 to give you this particular amount. So let's say this is actually a $250 for each 10 trades. So if it's actually a 10,000, a 1,000, it's going to be a different figure because of how the capital will be actually increasing. So we've actually talked about the distribution of wins and losses. We've actually seen that with a 3/10 win rate, we will be able to make money, or will be actually left with a net profit that is positive. And with that, it means that the higher we increase our capital, the higher our profit will become. This particular trading system will be actually easy on our psychology, in the sense that we have already prepared our mind to want to lose 7 trades. And I've said they should be done in different days, so that we do not waste, or we do not actually use all our chances for the trials in one particular day. You also need to use the Forex calculator, so that you calculate the lot size that is required for you to lose one particular loss. Do not be someone who says, I am feeling lucky today, let's go all in and so forth like that. We need to be consistent in terms of how much we lose per trade so that the mathematics will actually work out for you. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.